All right, today we're going to talk about how private lending, hard money lending, can complement stock market investments or just other investments in general. I have several investments out in the stock market, like many other people. Then, of course, private lending and other investments, and I think they all complement each other. So today we're going to go ahead and discuss that. This is another daily parallel brief. We talk all things finances, investment topics as it relates to how we run our hard money lending fund. And what we see on a day-to-day basis is not financial advice, not investment advice by any means. Big disclaimer there. If you want advice, go somewhere else. This is just us talking briefly, 2-3 minutes each workday of the week, how and what different investments and financial topics we see on a day-to-day basis. And today we're going to talk about why we think private lending can complement the stock market, especially right now. It seems like a fair time to talk about the stock market just because it's been a bit volatile at times, especially as of late, with all some negative headlines and, different things going on around the world that really impacts the stock market now over a period of 10, 15, 20, 30 years. The returns are probably going to be kind of similar. Maybe one outperforms the other, here and there. Maybe at the end, depending how aggressive you are in lending, maybe that takes priority. And depending on if you just stay in the S&P or if you do other investments, maybe that tends to go a little higher. But I think private lending can complement the stock market. I think several reasons why. I think number one, based how, at least I operate and what I do, I like to have different portions of capital allocated to different vehicles and different risk tolerances. So say if the stock market is just ripping, then I'm able to enjoy, and that benefit. The stock market is getting crushed or just maintaining. Well, I have private lending that is usually a bit more, not a cyclical, if you will. It's a bit more consistent in the returns. When the S&P rips, the private lending probably can't compete in that. At least hard money lending, as we do it. When the stock market gets crushed, at least hard money lending, at least the field we're in, and other hard money lending funds, they tend to do okay, or at least maintain consistency. So another reason why I think it's good is just because the volatility of the stock market at times and an investor psychology, me included. I don't like seeing when the S&P is getting crushed. And a lot of my long-term retirement, it's like, wow, it's really down. Then at the same time, on years and weeks and months where it's ripping and doing great, I'm like, man, I wish I had all my money in that. So I think it's good to be allocated. So it gives the investor psychology, or it gives the psychology of the investor, some alternatives to kind of look through. If investors are only long-term thinking, maybe it doesn't bother them. For me, I'm not that, my brain's a little different. I like seeing some consistency. That's why I like the private lending route. So if you see 1 month or 1 year, the S&P crushes 20%, but private lending stays 10, 11, 12, okay, great, S&P crushed then. Then the next year, if the S&P is, 4% or 0 or down, whatever it may be, well, you have private lending kind of off balance that. So I think they complement each other well. One's more volatile, one's a bit more consistent, at least as of now, and anything could change, but so far today, it's a bit more consistent, at least as of right now. So it's good to have those two different vehicles working for you. If you like this type of investment, financial topics that we talk about, again, we're a hard money lending fund out of Texas, primarily lend out to fix and flippers, builders that are involved in ground up construction projects and first lien positions, all throughout DFW area in Texas, but all throughout Texas is where we lend out to. So if you want to learn more, or if you're interested in this type of stuff and this isn't too boring, please consider liking, sharing, subscribing to the video. It helps us grow. We'll see you next time. Thanks for watching.